Hello everyone, Brian from Bear Traders here. It is the weekend. Yes, it is the last weekend of 2023, December 30th. And this is, of course, the weekend video. We'll go over what happened last week in the market. It was a short trading week, obviously, and relatively low volume, which is typical for that week. And then we'll take a look ahead and what we got coming up for the first week in 2024. So let's get down to it. Okay, so let's take a quick look back at what happened last week. Shortened trading week between Christmas and New Year's. And the last day of the year, last day of the trading year, we really saw some interesting price action. Seemed like some profit taking after quite the run that we had through November and into December. But regardless, even though we did get some profit taking Friday, we still managed to eke out a ninth week in a row for most of these indexes here, the Dow, the Qs, and the SPY. The only index that really pulled back and didn't make a new high on the week was the small caps, but it has had a nice run over the last month or so as well. Continued expectation for rate cuts as soon as starting in March. I think the odds are about 80% for a rate cut in March, whether you believe that or not. You can see here where the money was flowing this week: healthcare, consumer staples. They were the biggest gainers. Energy did manage to eke out a gain on the week, although it has been relatively weak for the last month or two at least. Treasuries squeaked down a little bit. You can see they're pretty much the same, although the 2-year was down a little bit more. And I'm expecting next year, one of my predictions for next year is the yield curve will go back to normal. In other words, it will no longer be inverted, but that will mean the 2-year will have to come down a lot more to meet the 10-year. US dollar lost a little on the week. Of course, with the treasuries down, US dollar gets a little weaker usually. And Bitcoin down a little on the week, but still sort of in this 42,500 last I checked it. So that was kind of the way we went out on 2023. Okay, and before we get going here, this is where I do a quick plug for my new book on Amazon. It's called How to Trade Options. You can check it out there. Complete guide to trading options from beginner if you don't really understand options. And then I get into some trade strategies and risk management discussions. So if you're looking for some new strategies, if you're a seasoned options trader, you can always check that out as well. And of course, if you're new to trading completely, you can always check out my book, How to Swing Trade. And again, beginner's guide takes you through money management rules, routines, strategies of a swing trader. So that's it for the quick ad, and let's get in and look at some charts here. And you can see here the 2-year really starting to drift off this 5% level that we kind of hovered around for so many months. And now it's just starting to drift down. And I believe that that this year, at some point in time, our yield curve is going to uninvert. In other words, the 2-year rate will be lower than the 10-year and the 20-year. So getting back to a more normal yield curve unless something really strange happens. But that's probably is going to be happening. The 10-year coming down. I'm still short some calls, so I'm hoping this will find some support here. Only has to hang in for another couple weeks, and I'll collect the money on those calls that I've shorted. And you can see here where the 10-year is starting to pull back as well in anticipation of some rate cuts that are coming by the Fed. So the transports, always look at those because those are kind of an insight into the economy. You can see we put in a bit of a double top on the transports on a daily. We started to sell off on Tuesday, Wednesday, or at least Wednesday, Thursday, and Friday. We'll see if it holds this level in this moving average, but this is a bit of a warning flag. Volume again fairly light on this trading week, so it could have been just some profit taking after that monster run up. You can see here again we had a pullback here and it just turned into an ABCD pattern. So we'll see. You can see how low the volume was this last week. Of course, shortened trading week to begin with, but again, a lot of traders taking the time off to spend with family and friends. So you can see here we're still in a solid uptrend with the Dow breaking out to an all-time high. And again, here we go. Another nice week on the Dow, albeit again, sort of repeating myself, low volume. And the Qs, again, kind of a bit of a pullback here, Thursday and Friday. Again, kind of a little bit of a topping action here. We are quite extended after a number of weeks through November and December, and maybe due for a little bit of a pullback or correction before we start heading higher in the new year, which is probably going to be the scenario I'm expecting. The SPY, again, bit of a sell-off on Friday there, but you know, and a little bit of topping action here. Again, could be some just buyer exhaustion. Wow, volume was actually pretty decent on Friday on that sell-off. So maybe again, people taking profits. Again, Friday was the last trading day of the year. Was also the last day that you'll be booking for tax reasons. So maybe so locking in some profits there. And you can see here on the weekly again, fairly low volume. But and it does seem like we are running out a little bit of steam here, due for a little bit of a pullback or consolidation. IWM kind of rolling over here a bit on Friday, especially on Friday, was the only index that ended down on the week. You can see here again. We've pushed up into a prior level of resistance from back here. And so maybe we are going to do, get a bit of a pullback on the small caps going into the new year. VIX, again, looked like it was going to be start to move up here, but then sold off. And that's typical on a Friday anyway. The VIX typically drops off, sells. The dollar ended up on the day, but on the week, we still ended up down. Again, as the yields drop, dollar tends to drop. And we might be putting in a bit of a bottom here. You can see here, this is an area where we've had prior resistance and we end up breaking out, pulling back to the level of resistance, which is a very common pattern, and then finding support and then going higher. So again, we're back at this area. There's a moving average here. So maybe we do get a bit of a bounce on the dollar in the coming week or two. Bitcoin, sort of hanging in here, 42,300. 400, and it's moving around a little bit because last I checked it was around 42,500. But you can see here on the weekly we're kind of forming a pennant, and stocks will break out from as this price narrows. Buyers and sellers are duking it out, and usually there is some resolution, and it really depends on who wins. So if the prior move is to the upside, odds are that it will break out higher, but there's no guarantee until we actually break one way or another. So 45,000, 40,000 kind of, and we're right in the middle there now. So Bitcoin, keeping an eye on that one. So what I've got watching for next week, I'm keeping it kind of light right now, but see what happens in the first week of the new year after this sell-off. I am expecting the markets to move higher as we continue to expect to get a rate cut in December, or in March, I should say, of 2024. But let's start out by looking at Apple. Apple is really struggling here, and of course this news about the watch didn't help. But you can see here this 197.50 looks like a pretty significant area of resistance. You can see momentum indicators really starting to roll over here, almost getting to a point maybe where it might be an opportunity to pick some up. But certainly at this point, it looks like 197.50 is an area where it's really struggling to get through. So Apple kind of keeping an eye on that for an opportunity to get in. AMD had a really nice run, even last week. A little bit of a pullback on Friday when we got to the 150 level, but AMD continues to look strong. I kind of doubt it's going to get back to this 140 level, which was prior support in the previous week, or prior resistance in the previous week, I should say. But AMD continues to look like it wants to move higher despite this little bit of a profit taking on Friday. Amazon again, kind of this 155 level, an area to watch. Watch this moving average here, 149-ish, 150-ish, could be an area where it'll find some support, and 147.50 is another area where there's some pretty significant support in this area. But we'll see. We might get a little bit more pullback early in the week next week, and you can see here some of the momentum indicators, MACD, stochastics, and RSI are rolling over a little bit here, so maybe a little more downside for an opportunity to get some Amazon at a lower price. Google still looks interesting. Again, had a couple of tough days in the end of the year here, but still looks good. And the volume on the sell-off was pretty light. So again, probably some profit taking after this monster move up. Meta's had a really nice move too. A bit of profit taking on Friday. Here's where we broke out from, but I think probably Meta. Again, maybe some opportunity to get in a lower price here, but all the momentum indicators rolling over a little bit, but they are really extended. You can see here what happened on these last times we were up this high. We did get a bit of a sell-off on this one. You can see how we sold off. Again, we're kind of putting in that same rolling over pattern here on the stochastics and on the MACD and RSI. TLT, I'm still short these two 102s. Had a bit of a pullback. Got a little nervous here, but pulled back, and I think we probably pretty extended on this. I might take some off early next week, depending on what the yields do. Hopefully the yields will go back up a little bit, which will cause TLT to sell off. Tesla again tried to break out of this 260 level. Thursday, Friday had a couple of rough days there, and we're back down to this sort of 248, 250 level on Tesla, which is should be prior support here. We've got a moving average coming up, so I'd again, Tesla always a favorite with the retail traders, so something to always one to keep an eye on, but it does seem a little bit range bound here for the time, so I'd be watching this 260, 250 level. Again, rolling over a little bit, RSI kind of dropping down here, so maybe a little more selling into the new year. But overall, I still think we've got a lot of upside. And that's about it. And before we move on to the wrap, I just wanted to point out this Fed Watch tool that's part of the CME group. This is where I'm coming up with some of these thoughts about where the market thinks interest rates are going to be at going into 2024. So you can see here the meeting dates: January, March, May, June, July. So January, you can see here there's 525, 550. Still 83.5%, but let's get into March here. Let's go to the Fed meeting in March, and you can see here where only 13.4% think that we're still going to be at the same level, and almost a good 73% majority of people believe we are going to get a quarter-point rate cut in March. And there's even some people, an equal number of people to the people who are staying the same, think we're even going to get a half-point cut. So that's really aggressive, but that's what there are some odds on people are thinking. And if we go to May, they've got 70% have got, at this point, 2 rate cuts factored in. And so that's even more aggressive. And 15.6% think we're only going to see a quarter point at that point, and sort of similar amount of people think we're really going to be aggressively cutting. If you get aggressive cuts like this, I would think that the economy has really got to be rolling over. And again here, if we go into the June meeting, 2/3 of the people believe we're going to be well into the rate cuts by then. So this is where I'm getting this sort of prognostications or predictions as to whether rates are where the market believes rates are going to be going in 2024. So just an FYI. So wrapping things up here, starting out January 2nd, we'll be back at work. Here's your levels. Of course, the Dow breaking out to an all-time high. It's kind of hard to figure out where resistance is going to be because there are no prior levels to measure against here. But 38,000 looks like a good number there. You can see here the Qs, the SPY. We're right at all-time highs here as measured by these levels of resistance. So we could possibly break out next year into those levels I already discussed. And you can see here IWM still a long way from some highs here, but there's your resistance and support. As far as economic events for next week, of course, we got Monday the holiday, New Year's Day, and then we do have some interesting stuff coming up. We do have some job openings. Fed meeting minutes at 2 on Friday, or Wednesday, I should say. ADP employment, that's an interesting one. Employment, everybody's watching. And again, employment and wage data on the Friday at 8:30 before the market opens. So everybody's kind of watching to see what employment's going to do as sort of a gauge as to where inflation be going. As far as earnings, there isn't a whole lot of interesting stuff here. We've got Walgreen Boots, we got Conagra, and then Constellation Brands, but that's about it. But we will be getting into some earnings fairly soon here in the new year. We start out with the financials. Anyway, hope everyone had a good holiday so far. Happy New Year, everybody. I'll be talking to you again in the new year, but we'll see you on January 2nd, hopefully. Our pre-market show always starts at 8 o'clock. And live on YouTube, you can join us there. And then, of course, trading the open with our members at 9:30. Happy New Year, everybody. And hope it's going to be a great 2024 for everybody. So ciao for now, and we'll see you in the new year.